This is the World Financial Report podcast. My name is Randy Marshall. Joining us is our financial and diamond expert, Harold Siegel. We're taping on December the 6th, 2018. Our time is 8:15 a.m. Mountain. Connect with Harold at rarecoloreddiamonds.com. rarecoloreddiamonds.com. The companion to the podcast is our free weekly newsletter. The material we talk about today will be from it, and you can get it from Harold. All you need to do is connect with him at rarecoloreddiamonds.com. He'll be happy to put you on the list to receive it by email free of charge every week. It was a bit of a strange week because yesterday in the United States, it was a national day of mourning to remember George Herbert Walker Bush, former president of the United States. Did watch a little bit of his funeral, and I thought it was a very nice tribute. The markets have been volatile. Let's give you an update. US dollar is at 96.98. Canadian dollar is at 74.58. It has pulled back due to the fact the Bank of Canada did not raise interest rates and have given guidance that it doesn't look like it's going to be happening anytime soon. The euro at 113, pound 127, gold 1236, silver 1434, gold silver ratio 86, platinum 790, palladium almost as high as gold at 1211, WTI 5127, Brent 5995, nat gas 432, Bitcoin in US dollars 35.8948, Bitcoin Canadian 48.4782. The Dow at 24,660. It's seen some big down days here recently. S&P 2,700, Nasdaq 7,068, TSX 15,182. Harold, a lot of volatility in the marketplace right now.
Oh, you bet. The Dow's down another 430 points, so it's at 24,597 right now. So this week we've seen some huge drops. I think it was on Tuesday the market was down over 600. So, but you're talking about a 25,000 point Dow, and you're talking about a market that hasn't really pulled back in 10 years. So, you know, we are seeing larger moves, but then again, the market has never been this high before. So it appears that 400, 500, 600 point moves in the Dow up or down is the new norm. But there is concern in the market. First of all, the S&P index just went into a correction phase. So I know the Dow is almost at that. It's down about 2,000 points from their high. A lot of it has to do with the uncertainty. Are we going to see another interest rate hike? I think we have to. You know, even though oil prices are coming down, oil prices really don't factor into inflation. Things like, believe it or not, rentals and things like that, home rentals and apartment rentals are a major factor, and the workplace and things like that. So is it possible that the market could fall further? Of course it is. You know, there's a lot of negatives in the market, but the fact is it's always been a resilient market. The fact is that there's a lot of buyers out there. There's a lot of foreign money coming into the market. So it depends on what's going to happen a lot with China, but things seem to be easing up a little bit with China. I think President Trump and the president of China are starting to work on some deals that may, you know, take a little bit of the risk and concern out of the marketplace. And how high are interest rates really going to go? Because the fact is that we do have inflation, but not runaway inflation. So again, the market, I think at this particular point, the Dow, unless something happens with Trump and he gets impeached or something like that happens, I think the market's just going to basically trade in a range. Now, the fact is that it's been down to this price before, and then it jumped right back up to the, 12,000, 12,500 level. I'm sorry, the 26,000 level. Now, gold is up substantially. Last week, we said that if gold was able to break out above the 1230, 1232 level, that we could see a rally to around the 1240, 1245 level, and that's what happened this week. In fact, gold right now is trading very close to 1250. So again, it's like gold would love to break out, but it's tied into the dollar, and the dollar, hit 96 and change today. I think 96.60. So the dollar is still strong, and as long as the U.S. dollar is strong, there's no way that gold is going to break out unless, again, it was something like I mentioned before, where something happens with Trump and he gets impeached or thrown out of office or something like that. So we'll have to see what happens. Oil market is a concern because it's down heavily today, over 3.5%, and down to $51. The shocking thing is what Randy brought up at the beginning of the show, is that palladium is now at the highest level it's ever been at. And to me, that doesn't make a lot of sense, because when we first recommended palladium back a long, long time ago, back probably in 2000, around that time, it was trading at $170 an ounce. $170 an ounce. And the reason palladium started going up in value was because in the catalytic converter industry, in the automobile industry, platinum and palladium are used to make catalytic converters. But the price of platinum was always 11, 12, 13, 14, 1,500 an ounce. And palladium that had the same properties was $170 an ounce. So it only made sense that the manufacturers and the car manufacturers were going to buy the $170 metal instead of the $1,500 metal. And it started to go. In fact, at one time, the price of palladium went up to $1,200 at a time when and it almost bankrupted Ford, because they paid that kind of money for palladium, really stocked up on it, and then Russia did what they always do, which is play with the market, and the market plummeted back down. Now we're back at a situation where palladium's over $1,200 an ounce, and platinum is way below that. So are we going to see a reversal of that? Well, we see soon that platinum will start to come up and palladium will start to come back down. So we'll obviously keep a strong eye on it, but I don't see why in the world palladium would be as high as it is right now and platinum falling, because the real reason for palladium going higher is the catalytic converter industry. And it's not that the auto industry is doing that great at this point. So again, I would say, if anything at this time, that palladium would be a short, certainly not a long-term buy.
Connect with Harold at rarecoloreddiamonds.com, rarecoloreddiamonds.com. Get our free weekly newsletter, the companion to the podcast. I guess it was about a month or so ago on the podcast, we mentioned at that time that 89% of assets denominated in U.S. dollars were not making any money. An update on that story for you. It's the worst time to make money in markets since 1972. Market statisticians are falling all over each other in 2018 to describe the pain being felt across asset classes. One venerable shop frames it this way: things haven't been this bad since Richard Nixon's presidency. Ned David Research puts markets in 8 big asset classes, everything from bonds to U.S. and international stocks to commodities, and not a single one of them is on track to post a return this year of more than 5%, a phenomenon last observed in 1972, according to Ed Clissold, a strategist at the firm. In terms of losses, investors have seen far worse, but going by the breadth of assets failing to deliver upside, 2018 is starting to look historic. Nothing's working. Not large or small cap stocks in the United States, not international or emerging markets, not treasuries, investment grade bonds, commodities, or real estate. Most of them are down, and the ones that are up are doing so by percentages in the low single digits. That's all but unique in history. Normally, when something falls, something else gains. Amid the financial catastrophe of 2008, treasuries rallied. In 1974, commodities were a bright spot. In 2002, it was REITs, real estate investment trusts. In 2018, there's nowhere to run. Overhanging the markets have been concerns over how asset prices would handle the removal of ultra-easing monetary policies. Clissold, chief U.S. strategist at Ned Davis Research, said in a note published last week, during previous instances of market turbulence, there was a bull market somewhere. But Harold, today, right now, I guess maybe unless you're in palladium, there really is no market that is gaining any substantial way in making money for investors. The craziest market since Richard Nixon in 1972.
You better believe it, Randy. Again, we've been successful in the past at picking trends in the marketplace. But for the last year or so, during the radio show, we've made no recommendations because of that exact reason. Because we're not going to recommend something to our listeners and to our clients that we don't feel has a chance of being profitable and doing well for them. So that's exactly what I'm talking about. Number one, the stock market is so risky. which is obvious with the volatility, that's not something that we would ever recommend. We're never going to recommend, for our listeners to go out and buy Google or Amazon or Apple, stocks that are so highly inflated and so, risky and volatile. So the stock market really isn't doing anything. It's not going to break out at this point here unless something phenomenal happened. But that's not in the cards at this point. So the other thing we've talked about for a long time is the fact that the Dow is just so expensive that it's priced out, the middle class. They got wiped out 10 years ago and are not really able to get back into the market because of all the money that was lost back then. But buying at this particular level right now is insane, not something that we would recommend in any way. Now, some people are going to be saying, well, gee, gold is up to $1,250 right now. Should we be hopping in? No. Because the confirmation for gold is at $1,380, not $1,250. And we've been sucked into that before, or almost sucked into it before, because gold got to $1,370, and we talked about the $1,380 level as major as far as the resistance level goes, and if the 1380 level was broken, that market could have broken out to 1600 again. But we got to 1370, and the market fell all the way back to 1180. So that's why you can't go with false signals, and you have to wait for confirmation in a market before we're going to, myself personally, would ever recommend it to you or put any money into that market. So right now, we're just trading in ranges. And it would be nice to say, okay, we feel that gold is now going to go back up to 1900, so let's buy it at 1250. We just can't do that because we've been in that scenario before. And fortunately, we didn't put out a buy signal. We are getting close to it, but when it didn't break 1380, it fell all the way back down. So there's no markets at this point here worth investing in that you're going to make any type of return without taking a gigantic risk. And I just don't think at this particular point that speculation in these type of markets is the way to go. Right now, it's a matter of just sitting back and waiting for the markets to come to us, as opposed to us trying to make an opportunity in a market that isn't ready to go. Because the fact is that gold will not run if the dollar is strong. And we've seen that happen umpteen times. I mean, it's the number one factor when trading gold is what is the dollar doing. And if the U.S. dollar was going to come down substantially back down to 70, 72 cents, we'd be looking at gold right now back up at 2,000. But that's not in the cards at this time.
JP Morgan coming out saying this week, cash is better than stocks for the first time in a decade. Cash isn't only a safe place to invest, it now offers a better risk-adjusted return than equities, according to JP Morgan. One of the recommendations for 2019, cash to be overweighted. For the first time in a decade, investors can get a lot more from safe, liquid securities than from the S&P 500 index, adjusted for volatility. They go on to say that Treasury bills are poised to end the year with the highest risk-adjusted returns of the world's biggest assets. And Harold, I give you credit because you did say there's nothing out there we can really be making money with, and the best thing to do is sit in cash, and it has turned out to be the correct call at this point.
Well, again, there's no sense in, you can't make a market do what it's going to do. So if there isn't the opportunity, you can't manufacture opportunity. We have no control over the stock market and what it does. So the fact is that I've traded markets for over 35 years. I've got a good feel for the markets. And if something is not in place, we're just going to sit back and wait for the markets to do their thing. Now, the unfortunate thing is that gold hasn't really moved since 2011. So we're talking about a 7-year sideways market. It may not seem like that long, but that's how long it was since gold, and we had an 11-year bull market. We saw gold basically go from $250 to $1,920. It took 11 years, but that was the biggest bull market of all time. It only took a few months from it to drop from 1,900 to 1,050. The markets always come down faster than they go up. So when the opportunity is there, hopefully we're going to be there to point it out to you and to let you know how to get involved in it type of thing. But right at this particular point, there's just nothing worthwhile to invest in that's going to give you any type of return once you factor in what the risk factor is, which we just don't want to take risk at this particular point.
Connect with Harold at rarecoloreddiamonds.com. Rarecoloreddiamonds.com. Get our free weekly newsletter, the companion to the podcast. We'll be happy to send it out to you via email free of charge. As was mentioned, the Canadian dollar this morning down below 75, 74.58. The reason? The Bank of Canada walked back some of its enthusiasm about the economic outlook as it kept interest rates unchanged, suggesting there may be less urgency to tighten monetary policy. It seems right now, where the rate is at 1.75, it may not be going much higher in the future from there. The same for the United States. As we mentioned on the last podcast, Jerome Powell, Jay Powell, Federal Reserve Chairman, came out and said that they were near normalized rates, where in the past they had said there was more room to raise rates to get to what they considered normalization. So, Harold, as we said on the last podcast, Canada would follow in the footsteps of the United States Fed, and that has happened. They did not raise rates. I suspect the Canadian dollar could go down a couple of pennies from here. I would be surprised if it doesn't.
I believe it will also, Randy, unfortunately. But, you never know with the Canadian government. Sometimes they want a weaker dollar because it helps with exports. And sometimes you just can't control it. Like any currency, something will happen and the currency is going to react to it. The only thing that's really moving the Canadian dollar at this point is the potential for a rise in interest rates because of inflation. And if inflation gets dangerous, then they're going to raise interest rates anyways. So I think at this point here, inflation is not raging. Don't forget, back in the 70s, in 1972, when they were saying that the market hasn't been in a similar scenario to this since 1970s, early 70s. Don't forget, in early 70s, gold was trading, if I'm not mistaken, at $125 an ounce back then. I think it was just coming off the gold standard and went from $35 to $100, $100 and a quarter, which started the bull market in gold. And basically back then, because the gold market started to run because of silver ran because of the Hunt brothers, but the real reason was inflation. And don't forget, inflation really started to take over in the 70s, and by the early 80s, interest rates were all the way up to 22 to 25%, which really brought both countries to a standstill. You could never get a mortgage. Who could afford a 20-some-odd% mortgage? Who could afford to go out and buy a car on credit and pay 22, 25, 27%? Businesses were going out of business at that point. The markets were not strong, obviously, and things were difficult. And if they're comparing right now, 2018 to 1972, 1972 is one of the most difficult times in the marketplace. So what they're saying right now is shocking to most investors if they're comparing the economy right now to what was happening in the early 70s. That was a time of tremendous disarray. That was a time that the metals, silver went to $50, gold went to $750, $800, oil was skyrocketing, interest rates were skyrocketing, the dollar was very strong. And gold was rallying at a time when interest rates were going up. It was one of the only times in history that actually happened. But then again, there was outside factors. There was the Hunt brothers. There was Libya. There was oil embargoes. There was things like that. And, the markets were new. People, were just really getting into the commodity markets at that point. And sure enough, they were treated to a run in gold that defied description, silver, oil, currencies, all those type of things. So again, if they're comparing today's marketplace and making money to the same period in that's a scary scenario for me.
One of the things that we talked about on last week's podcast here in Alberta, the oil that comes out of the oil sands, we do not get what is paid for WTI or Brent. WTI 51.27. The Western Canadian oil, different companies were getting around $10 a barrel, as crazy as that sounds. And yes, Alberta Premier Rachel Notley did do something about it. A temporary temporary 8.7% oil production cut or decrease of 325,000 barrels a day starting here Jan 1, 2019. They also plan on adding more locomotives, rail cars to ship and transport the oil, trying to get different pipelines built as well. But that did result in Western Canadian Select oil going up to over $30, which is good news because they were almost giving the oil away. Harold, we need pipelines here in Alberta heading out to different markets beyond the United States. Very difficult to do based on political will. But at least in the short term here, we've brought up the price of Alberta Oil due to the fact that they have curtailed. The oil production cut will be 8.7%. What do you think?
I think the oil market's in trouble again because it shouldn't be down to $50 right now. Again, we've got a scenario in oil where Iran's oil is off the market because of embargoes and everything against Iran. And Saudi Arabia came out and OPEC came out and said that they were going to cut production. So how in the world is oil falling under that scenario? It makes no sense whatsoever that you're taking Iran's oil off the market and OPEC is not overproducing. And they came out with that statement, which normally would have sent the price of oil up probably $10, $15, maybe even $20 based on that scenario. And it's down substantially today. So there's something bigger happening in the oil market that's coming out in the news type of thing. But I expected oil actually to rally, not to fall as much as it has. I know the U.S. is producing a lot more oil, and that does have some effect on the market. But when you take Iran's oil and, OPEC's oil being cut, the market should be stable or rallying instead of dropping.
One thing we have in our free weekly newsletter this week, we're not going to talk about it on the podcast, but I encourage you to read about it. Get our free weekly newsletter from Harold at rarecoloreddiamonds.com. Hedge funds are in trouble. They are having major redemptions. They are not making any money because, as we touched on off the top of the podcast, worst year since 1972 to make money, and they are cutting back people in a major way. Lots of layoffs. Ray Dalio, he is a hedge fund manager, one of the top in the world. We mentioned in the past that he had said he believes it's a national crisis in the United States. Robots. And robots are coming to Walmart near you. And it's not just a gimmick. The world's largest retailer is rolling out 360 autonomous floor scrubbing robots in some of its stores in the United States by the end of January. And that will just be the start. Before you know it, they'll be moving into other areas in the store. Harold, I do agree with Ray Dalio. There are a lot of people potentially that are going to be unemployed as a result of robotics being used in different businesses, and there needs to be something done about it very soon because it's going to be not just a national crisis for the United States, but a worldwide crisis.
Better believe it. The fact is that unless they have something to offset that, like a new industry that's going to hire a tremendous amount of people, I mean, where is this going? Where are all these people? How are they going to survive? And obviously, corporations are all about profit, not about people. So if a corporation can cut something to make more money, they're going to do it. And if it means replacing, humans with robots that could, do certain jobs, the unemployment level in this country is going to be astronomical. So I don't know how they're going to get around that, to be honest with you. If these corporations have the opportunity to improve their bottom line, they're going to do it without thinking twice about it. So unless another industry is going to come online that is going to hire a tremendous amount of people. When Trump first came into office, he talked about rebuilding the structure of the United States, the bridges, the roads, and all that, and putting a lot of people back to work in the construction industry. I'm not seeing that, to be honest with you. I'm not seeing that people are really, finding those good jobs, because where unemployment is low in the United States, a lot of it is menial jobs that people, cannot get by on. So that's really concerning and very, very frightening to think that coming up in a few months, one of the biggest retailers and corporations in the world is going to be trying this new procedure of robots. And where's that going to go to? They wouldn't be trying it if they didn't see it as as something for the immediate future. And it's going to be substantial. It's going to be it's really going to hurt the employment market.
One thing that has been talked about is handing out free money to people to help them out. Well, it hasn't really quite worked out very well in Switzerland. Here in Canada, they tried it in Ontario, and that was canceled when the new Conservative government came into place. But a village in northern Switzerland, hoping to pay people up to 2,500 francs, and that's about roughly the same in US dollars, a month, has failed to raise enough funds for their basic income project. So they didn't raise enough money. The crowdfunding campaign yielded just 151,836 francs, a fraction of the 6.1 million francs required. More than half of the 1,300 inhabitants of Rhino by the River Rhine, close to the German border, had signed up to be a part of the test. They were going to try it, hand out money. It was rejected in an unconditional basic income plebiscite by the nation in 2016, but this area of Switzerland decided to try it on their own. They could not raise the money. Harold, I think the average everyday person believes that just handing people money without working probably is not a very good idea, and I would agree with that.
I don't know who the brainchild was that thought that up, but oh my God, that would be the epitome of a socialist government. Nobody would have any incentive to work. It's ridiculous to think that they could do that. Plus, what it will do to their currency is going to be, medium and long-term disastrous. So, no, I just don't see where something like that's going to work. Paying people for no reason whatsoever makes no sense to me whatsoever.
Harold's website is rarecoloreddiamonds.com. There were 2 auctions during the week. Sotheby's Magnificent Jewel Sale, December 4th, 2018 in New York City. In our free weekly newsletter, we do have auction results. In the weeks ahead, we'll break those down. Also, Christie's Magnificent Jewel Sale, December 5th, 2018 in New York. Auction results for that sale. Now, what did sell was Barbara Sinatra's jewels. There was a 20.60 carat decolored VVS1 Clarity Diamond engagement ring that Frank Sinatra gave Barbara, and it brought in $1.7 million. The estimate on it was $1 to $1.5 million. The bidding was over the phone, and it was hot and heavy. As well, an 18-carat diamond smashed estimates at Bonham's. It was an 18-carat diamond that fetched $828,500 at Bonham's on Monday. It exceeded the pre-sale estimate of $400,000 to $600,000. The emerald-cut G-colored VS2 Clarity ring, flanked by trillion-cut diamonds, led the company's New York fine jewelry sale. But Harold, overall, the auction results were very strong for New York. The Sinatra jewels and other memorabilia that will be sold over the next couple of days has been selling very strongly. Bonham's doing well with that white diamond. The diamond market is very hot right now.
It is. Again, when the markets are like they are now, and stock market's dangerous and volatile, and the commodity markets are the same, investors look for other avenues, and hard assets have always been that type of asset, because there's no way that an investor is going to spend whatever he's going to spend, whether it's $100,000, $1 million, $10 million, $50 million on an asset, if they don't feel that that asset is worth it and going to increase in value over time. Diamonds are longer term investments, but again, most people that invest in those assets keep them in the family for a longer period of time. That's where the biggest moves have come. I mean, you're talking about, how long has Frank Sinatra been dead now?
Oh, I would say probably at least 15 years.
Exactly. So you're talking that, and he was married for probably 50 years. So you're talking about something that stayed within the family for probably 60 years and had an opportunity, to go up substantially. Funny story is that my wife's uncle was the head of the Glenn Miller Band. He played with Gene Krupa. He was a big musician, and he was very friendly with Frank Sinatra. So my wife, Harriet, used to call Frank Sinatra's manager Uncle Jilly. He used to, whenever they came into town, they would always, meet Harriet and take her out, type of thing. So one night, Harriet and I and some good friends of mine who Actually, he was a big radio guy, and he got Gloria Estefan started in her career. So we're having dinner together in a restaurant that we normally frequented, and all of a sudden the owner comes and tells everybody in the restaurant that they have to leave. This is on a Saturday night, and at around 10 o'clock, everybody had to leave, and they said that Harriet and I could stay, and my friend Dave and Valerie could stay. So we're wondering what the hell is going on here when all of a sudden a limo pulls up. Two limos pull up. One of them is Gloria Estefan and her husband, who Dave got started in their career, and the other was Frank Sinatra and his wife Marilyn. And they came in, and we were the only ones in there, and we were actually allowed to talk to him. But when Harriet reminded him who she was and who Uncle Jilly was, it was just a beautiful thing. So we actually got to meet Frank Sinatra that night. But my wife actually was like a daughter to his manager.
Outstanding story. I love hearing a story like that. I love Frank Sinatra's music. When I drive around at times, I still listen to many of his songs because
My Way was everything. I mean, but you're right, Randy. He was just an amazing, amazing guy and great singer, and the world misses him. There's no doubt about it. But it's good to see that his pieces, sold for good prices, and again, it doesn't shock me because that's what diamonds do. When you buy the best, expect the best out of it. So we're very excited about the diamond business. We've been buying Argyle pink diamonds, for the last 15 years. And the reason that we bought them was because we got word that the Argyle mine that produces 95% of all pinks is going to close by 2020. So you're talking basically another year, and the one mine that produces most of these diamonds is going to be no longer. So I felt that the price of pink diamonds was going to increase substantially as we are closer to the mine closing. And then when the mine closes and there's no more pink diamonds, you've got something that is in big demand, but there's no supply of. So we just felt that there would be a phenomenal investment, and that's exactly what it's proven to be. Now, we haven't sold any of our Argyle pinks because that defeats the purpose of it. The mine is going to close, and we've held these diamonds for that long. We want the big score. We want the big payday. When the mine closes, give it 2 years for all the diamonds to run out. And then we have an auction website and a blockchain that will resell our clients' diamonds for them. So we're very, very excited about that. We're now coming very close, to our game plan, which was the Argyle mine closing. And Rio Tinto, who owns the mine, has confirmed that they are closing in 2020. They also confirmed that they have maybe enough diamonds for 2 tenders, and that's it. And after that, there won't be any more pink diamonds coming from the mine. And if you're one of the fortunate people that owns an Argyle pink diamond, I just believe we're going to do very, very well. We still have some diamonds offered for sale. Most Argyle pinks are smaller diamonds. In fact, 95% of the Argyle pink diamonds that come out of the Argyle mine are under a quarter carat. But they're known as the most concentrated form of wealth on earth. And these are assets that do not lose value, that are portable in private wealth. But we have a very unique situation that will probably never happen again, which is a diamond mine that produces 95% of a given diamond, in this case pink diamonds, will be no longer. And I just think that the price is going to increase substantially. So it's a great investment. It's something that, again, right now, with the stock markets and the commodity markets and everything in disarray, it's nice to own an asset that doesn't trade as volatile as stocks and commodities that trade on exchanges. So it's a very exciting time to be in the rare colored diamond business.
Check out Harold's website, rarecoloreddiamonds.com. We get to the end of the podcast. A couple of notes. I thought this was fascinating. 100-year-old billionaire, oldest billionaire alive. His name is Chang Yun Chung. He founded the Pacific International Lines in 1967 with 2 second-hand ships. 100 years old. He turned the company over to his son earlier this year, but he continues at the age of 100 to show up to work every day. Every department comes to see him. For him, it's his way of keeping his mind active and staying in touch with the company he set up. I cannot stay at home, said the billionaire. I get very, very bored, but I love to hear that story. 100-year-old billionaire built his company from scratch and still shows up to work every single day.
I love that. Work ethic And that, again, with the new generation of millennials that are the opposite of that, it's great to see that at his age, he's still sharp, doing his thing, and that's what probably keeps him that young. By the way, the Dow is now down 555 points on the day.
A couple of other quick closing notes here. A bottle of Macallan 1926 60-year-old whiskey shattered auction records. Most expensive bottle of whiskey ever sold, $1.5 million. An Einstein letter sold for $2.4 million. Einstein wrote that God is the product of human weakness. Did watch the video associated with the story, and when the hammer dropped, the auctioneer said $2.4 million and apologies to God. So I thought that was quite funny. And in closing here, George Herbert Walker Bush, President of the United States, passed away. He was being eulogized yesterday by his son, George W. Bush, and there was a great line from George W. eulogizing his father. I hope it for myself, Harold, everyone listening to the podcast. George said, I once heard it said of man, and this can go for people in general, that the idea is to die young as late as possible. And Harold, I love that sentiment.
So do I. It was very emotional to hear George talk about his father. It was beautiful, very emotional. And let's face it, they've had a great life. Barbara Bush just passed away a short time ago, so, they'll be together. And they lost a daughter, I think, when she was 5 or 6 years old. So, the feeling is that all of them will be together again. And it's a beautiful thing. He's had a phenomenal life. Look at his family, his son, governor of Florida, his other son, president of the United States, just a phenomenal family.
And I believe they were married over 70 years, which is a record for U.S. presidents. Harold, thank you for your knowledge and another great podcast.
It's my pleasure, Randy. I wish everybody a wonderful weekend and a very profitable day.
Get the companion to our podcast, our free weekly newsletter. Connect with Harold at rarecoloreddiamonds.com. Take a look at the Argyle pink diamonds on the website. That's it. Another edition of the World Financial Report podcast. My name is Randy Marshall for Harold Siegel. We will talk to you next week.